Ordinary investors cannot always figure out what world events impact the Indian stock market. Federal Reserve policy, trade disputes, oil prices, subprime crisis, quantitative easing, Grexit, Brexit, decoupling, and so on. But professional investors always seem to find a connection. During the 2008 global financial crisis, the Indian stock market fell by more than 50%, largely due to selling by foreign investors, FII or FPI. Those with quality stocks that sat out the downturn and stuck around for the next 5 to 10 years made a lot of money. Let's take an example of what happened to the Maruti share price over 10 years. In August 2007, it hit a high of 1,187, but in 15 months during the collapse of the Lehman Brothers and the Asian crisis, fell 60% to 485 rupees. So if you sold in panic, you would have lost 702 rupees out of 1187. But let's see if you didn't sell and held on. In December 2017, 10 years later, the share was worth 9,804 rupees, up 725% or 7.25 times your original investment. This lesson is worth remembering right now, when the markets have fallen from a high of over 36,000 from early this year to a low of 32,500, down 10%, but are inching back up. See Bisbo's story on why the markets fell. Despite foreign funds withdrawing over 25,000 crore from the equity markets after this year's January high, indices did not drop as drastically as they would have, and this is largely because of you. The reason is the growing popularity of SIP or systematic investment plans, which have become the most popular way for the common man to invest in the market. By investing a fixed amount from one's salary every month, it becomes a forced method of saving that can give the best returns in the long run.
You can begin by investing with as little as 500 rupees.
While traditional fixed deposits give as little as 6 to 7% returns, mutual funds or asset management companies as they are called have given annualized returns of over 30% every year over the last 5 years. If possible, one must also choose 2 to 3 different fund houses, especially those with a good track record.
Though past performance is no guarantee of future results.
SIPs were first introduced in 1996 at a time when investment was not well understood.
Market is going up, buy. Market is falling, sell.
But soon, the market was up again, and people who had sold lost out.
I should have continued buying.
They soon realized that regular investments were beneficial, and SIPs began to be accepted as an intelligent investment tool. The beauty of a SIP is
that when it is bought month after month, some shares are bought at higher rates and some at lower rates. Over a period of time, the price averages out.
At the end of March 2018, there were 211 lakh or 2.1 crore SIP accounts through which people bought stocks, with an average of 8.5 lakh new SIP accounts being opened every month. SIP investments in 2017-18 rose 50% over the previous year and is expected to keep increasing and will soon touch 1 lakh crore. There are many reasons for the rise in investment through SIPs.
Fixed deposit rates are not as high as before.
Real estate is in a mess and is plagued by delays and high prices. An RBI study has indicated that demonetization has pushed black money into the banking system, which has then been invested through mutual funds into the stock market. Gold as an investment is still popular, but after 2010, it's not been able to match the returns provided by the stock market. While the long-term India growth story looks good, there can be periods of downturns caused by international events unrelated to India.
So I leave it to professionals to worry about my money.
To know more about SIP and mutual funds, visit the Association of Mutual Funds in India at www.amfiindia.com. Bisbo's Limerick. Invest in the market sip by sip. All it takes is to bring the cup to your lips. As time flows and your portfolio grows, soon you'll be passing sip on as a tip. Mutual funds are subject to market risks. Please read all scheme-related documents carefully before investing. All our videos are based on news and information published in leading international newspapers, magazines, professional journals and news channels, which we represent in a fun and interesting way. We pride ourselves on being a source of authentic news and information.